Do you buy gold here?
We think that there'll be opportunities to continue to add to long exposure. We might see a little bit of a sell-off, so there might be better entry levels. But beyond that, we think that upside risk still lingers for gold.
Are we looking at like 1,800 like Goldman says? Is it 2,000? Like, we're going to have that conversation again like we had in 2009?
We see a lot of macro factors turning increasingly supportive for gold. We see that the US Treasuries are likely to fall further. We expect 10-year yields to fall to 1.1 at the end of Q2. So we were initially forecasting gold to hit highs of 1,700, but we think that the risks now lie to the upside.
What about positioning? Like, how long are investors currently? Like, how much of its portfolio does it encompass now versus, say, 10, 15 years ago? As in, how much more catch-up can we get?
This is really fascinating. If we divide the investor groups up, we can see tactical positioning, gross longs are at all-time highs. ETP holdings came off a little bit yesterday, but still at all-time highs. But it's a retail demand that still continues to lag. So although we've seen some positioning at record levels, we still think there's scope for further upside.
Yeah, and that blue line is sort of where we are in the net futures positioning. You can see how extended it really is. The other metal that's really been on a tear, and not just recently, is palladium. Is that a safe haven, or is that a totally different kind of scenario?
We see the palladium dynamics unfolding very much linked to its own fundamentals. Mine supply is struggling to grow. We've seen continued strong demand from the auto catalyst side, and stocks are running low as well. If we look at ETF holdings, they've fallen over the past 5 years, leaving less of a buffer for the palladium market. So we see the palladium story very much driven by its fundamentals, and we think that the auto demand still remains healthy, even given the production impact in China.
What kind of price level do you think we can get to, and is there one where we all of a sudden see some kind of metal switching, say, in the car industry?
That's a great question, because we've already seen prices elevated, and at such levels where economically you could perhaps see switching between platinum and palladium. But despite this, there are so many other factors that are at play that are driving this decision, whether it's focus on alternative fuel vehicles, but the greater focus is really on compliance. Auto companies want to make sure that their auto catalysts are compliant with the strict standards, and that has been much more important than where price levels are.
How far can we get?
Palladium prices at this stage, it looks like can still run a little bit higher. It's difficult to say where that top is because the market is still hugely undersupplied. We're forecasting a deficit in excess of 1 million ounces this year, and we think next year we could continue to see that deficit persist. So given a top is quite difficult, but we still think that the market is very, very tight.
So let's finish up here with silver, because silver is in a really tough spot, industrial metal and a precious metal, and hasn't really rallied as much as gold has. Does it play catch up or not?
We think that silver has benefited on the safe haven demand that we've seen in gold, but its own complex, its own story is a little bit weaker. The industrial demand has been a bit softer, given the semiconductor shipments, given the photovoltaic industry as well. So we haven't seen that jump in terms of industrial demand supporting silver. So we still think that you'll see some investor interest in silver, but not to the extent that we're seeing it in gold.